Hi there, I've put this video together, I'm putting this video together today because I've been getting a lot of questions over the last year or so. People asking me, well, where do I think the Dow is going to go? And I've been meaning to put this video together for about 2 weeks because we've been discussing this concept in detail in our live online trading room, and we've been looking at various different patterns on the Dow and the S&P and also on the Nasdaq. But I felt that it was really important that I shared this with you, and you could actually get an idea of a very simple technical pattern that we're seeing in the market that doesn't automatically mean there is a short opportunity, but it does give some indication of how extended the Dow is and what sort of territory you're in, and actually showing you a specific zone that you can actually look for. So what we're not going to talk about in this video is we're not going to talk about fundamentals in terms of whether or not the market or shares in the US are overpriced, anything to do with the printing of money and the overvaluation of companies, or any reason why this particular move up can't continue. I personally do look at the fundamentals when I'm looking at a long-term picture, and in future videos I will be doing a little bit more on some of the specific fundamentals I'm looking at and things that you can do to make sure that you're protected. Because this run, I can guarantee one thing about it, is it simply won't carry on forever, and we will have a correction at some point. But during this video I just want to give you these technical patterns that I'm seeing, and you can then go and have a look at it for yourself. So let's go and have a look right now. Okay, so what you'll see here in front of you is a monthly chart of the Dow Jones. So it's the Dow Jones Industrial Average, it's the cash market, and what we've got here is a monthly chart. So each one of these candles represents 1 month's worth of data. So I'm going to take you back to 1999, all the way back here where my little arrow is, and you can see there were the highs of 1999 that you see there. And then after that point, what we had is we had a move down, and we had the dot-com crash of 1999, and you can see down into 2002 was the move down. And you'll notice that we came really to the lows of about 1998 back here. So the lows of 98, lows of back here in 97. So we reached an area of support, and then the market moved back up. Now, if I take the line from the highs of 99 and I actually locate the point on the chart, which you can see there, where we recovered, the distance from that high and low is represented by this blue line that I'm drawing here. Now what you'll notice is we not only recovered, we rallied and went further up. So what I'm going to do is show you the percentage of which that move up was. So if we imagine the distance between the low and the recovery is 100%, of that move we rallied a further, and you'll see the line going across here, we rallied up a further 50%. It was actually more, so it got us up a little bit higher. So in between the 50% and the 61.8% extension. So that's how much further we rallied up. Now if I adopt this same approach to the crash of 2008, what you can see here is here's the highs. We actually came down, we went slightly lower, but not far from that area of support. And then the same thing happened. If I take a line across and I note where we recovered, you can see that we had the move back up and we recovered. So if I take that same distance from those lows up to the highs, and I consider this 100% of the move, the distance from the crash to the recovery, what's interesting is if I adopt that same approach and I take the lows and I take them all the way up to the high, if I look where we are right now, we are seeing a little bit of downside this month. We've come in and hit 18,000, but what you'll notice here is the 50% mark is at 18,087. So we're finally getting to a point where we're in an area where if we were to see a correction, and if I was to see a set of specific signals, so a specific set of short signals, I would feel much more comfortable about taking a short in this area just based on that simple pattern. What it doesn't mean, as I've already said, is I will automatically short because we're there. However, if we do get the signals, I'll feel more comfortable. And interestingly enough, I've had plenty of emails over the last year and a half when we've been at levels like this, and people have got short in the market and they've thought it's going to be the big move down, or they've listened to certain fundamental information that's not giving them an exact time when that will be, and they've gone short thinking that it's going to push down further and further and further, and the market has just simply turned and pushed back up. And we had that same scenario a couple of months ago. People were saying, oh, is this the big move down? But within a month, if I space those candles out, what you'll notice is within a period of a month we pushed down and we were already back up and higher than where we were at the start of the month, and we've pushed on from there. So for me, I've really not been paying much attention to potential shorts until we've got into this 18,000 zone. Now the second tool that I've used is one of the things I've done is I've looked at the distance and the timing of these two cycles. So what I'm going to do is if I take the highs of 99 and I take them all the way through to the highs of 2008, and I consider that to be one distance from here to here, you'll notice that that same distance going forward takes us through to around July of next year. So for me, what's really interesting is we're now getting into a zone. So we're now getting into a zone where we may go higher, we may push up considerably higher, but we've also got a time area where I can see that the cycle would be repeating the previous cycle. Now it's only happened once before, but for me it's just it's just a very simple set of observations that you can use to essentially look and be a bit more aware of where the market is. I've had a lot of people saying that they're in index tracker funds in the States. What should they do? How much further will it go up? I can't say that, and I would never actually recommend to somebody what they should do with their own fund. However, what I've said to them is have a look at this scenario, and then from my personal experience with any trade or any position or any investment, if I was to get out here, I would be following a system. So I'd be following a very simple pattern that I'm seeing in the market. And for me personally, I would much rather be out of the market, and if it was to continue higher and push up from this point, I would much rather be out and have followed my system or followed a simple pattern, wishing that I was in, rather than being in and thinking, we're going to go higher, and then we fall away and thinking, do you know what, I wish I was out. So I'd rather be out of a trade wishing I was in than in a trade wishing I was out. And that's the same for an investment as well. So certainly for me, we're getting into a very extended area. We're a very big distance. We're the largest distance away from the 50 moving average that we've seen throughout this process. So that's my expectation. So if you were to summarize what I'm saying here, I've got my radar on, and if certain short signals now set up, I now have the pattern to back that up as well. So I hope that video was useful. I will be producing more videos talking more about the technical elements that we're seeing in the main markets, as well as some information on the fundamentals as well. So the easiest thing to do is to follow or search for our Facebook page, Trader Support Club. So just type that into Facebook and our page will come up. And then what I would do is like the page and make sure you click the Get Notifications tab just below there. And what that will mean is any further notifications, any new videos that I send out, any particular scenarios that occur in the market, you'll be one of the first to hear it. So also we're going to be posting up some new material and some free video training that we're going to be putting up, so we'll be letting you know about that on Facebook. So like the page, make sure you click the Get Notifications box, and as I said, I hope you enjoyed the video and I'll look forward to seeing you again soon.